Welcome back to Money and Politics, folks. And does it not feel a lot better to be looking at money and politics on the days when we are in the green? And we are in the green again for the second day of this week. Welcome to the Tuesday edition. And today, Humble shot up again. We closed at 382, a gain of almost 9%, and we were up 9% yesterday, if you remember, and I suspect you do. Forwardly, of course, was also up. Forwardly was closing at 64 cents. That's a gain of 3.8%. While Humble, as we see, at 3.82. Before I go any further, I don't want to forget to say thank you. We went over 6,000 subscribers yesterday, and here it is on the 23rd. January the 25th was the first time I put out, practically speaking, the first time I did a report, and that was on Humble, and that was January 25. So this is 2 months later, just under 2 months later, and already we're up to 6,000 subscribers. If you're watching and you haven't subscribed on the YouTube channel, please do. Please give us a comment if you would. A lot of the viewers and followers are talking to us about what stocks they like, and I'm taking a look at a number of those and we've already added a couple of those to our watch list. High Tide, the Canadian marijuana retail chain, and some others, and we'll be updating that as we go along. I wanted to tell you tonight what I want to do a little differently is something that has been a year, actually a little bit more than a year in the making. And before I get to it, what I want to tell you is what I'm going to tell you. I have talked to you before about how I'm not a big fan of a lot of penny stocks and I'll tell you why. Because on one hand, there's just a lot of fly-by-night companies in the over-the-counter market. And I think George Sharp with Forwardly would say the same thing. He has said the same thing. And he even said on his earnings call the other day that he is going to continue to be weeding out those who are pump and dump type of operations or people who have shell companies and really aren't worth investing in. He's trying to clean it up. So a lot of the OTC has historically been like tap dancing through a minefield. I mean, you might make it, but it's very easy to get into a company that's going to blow up on you. Now, I certainly don't think Humble is that, and I don't think Forwardly is that because of the warrants it has tied to Humble. So I just want to make sure I'm not conflating those. Now, that said, I would also say, while I am very cautious about the penny stock market, I would also say that given the changes in the marketplace, and I'm thinking here of the development of the SPAC process, the evolution of it, given what we've seen with the money that we've been making in Humble, that I cannot turn my back on the ability to make some good profits in the penny stock market. So what I'm going to be doing going forward, and this is just the evolution of my own thinking, because you just can't stick to your old ways of doing things. You got to, be realistic and pivot and respond to the way the world is now, not the way it's been for the last 40 years when I started investing back in the late 70s. So what I would say we would be wise to do as investors is to have some core holdings of good companies and to have perhaps approximately 10% of our overall portfolio that we might put towards penny stocks. And then within that 10%, where you might have, let's say approximately 6 to 10 companies that you've done some research on, that you think have a good story, that you understand why they have a good chance of going up. I don't want you just, buying on rumors. Those 10, let's say call them 10 penny stocks, will have, if you've done your research, a good chance of giving you a pretty good rate of return. And I think that's just something that I've certainly had to come to terms with. And so I want to say that. Now, that said, I want to talk to you tonight about something that I started back in January of last year, right? Like, I think it was January 2nd. I put together a list and I posted this on Facebook. A list of stocks I said people ought to be following. And before I started Money and Politics, I've been wanting to educate people for a long time on investing. So I put that out on Facebook with my list of stocks to buy. And I was going to have people follow this, and I was going to update. Here's how it's progressing throughout the year. Then COVID hit, as you know, and I didn't follow that, what I had intended to do. You get people who are laid off of their jobs and on. I just didn't want to be promoting investing in the stock market when a lot of people were having trouble investing in bread. But that said, I wanted to make the case to then the Facebook followers and now you, that you can put together, even with limited means, a solid core portfolio. So let me show you the list of stocks that I was going to do this with, or I did pick. Now, the first one, KEM, forget that, because right after I picked it, it was going private. So that really doesn't apply anymore. But what you see is we had TTD, then it was at 267. And before I go through the list, let me tell you what I was planning to do here. The idea was that I wanted to be able to have a handful of stocks where if you put basically $300 more or less into each one of these companies. So with that in mind, you can see that with TTD, it was at $267 and we bought one share. That's the number right behind the price there in the second column. You see the little one. So we bought one share of that. Paycom, which is PAYC, was $268. We bought one share. Square, $263, $5. And so that was the portfolio. You take out the approximate $300 that I put down for Chem, and you see that we would have invested about $2,041. So I just updated the prices on Sunday in preparation of doing this report today. Let me bring in what we have here. And so here's the stock picks from January 20th to March 21. And the point of this story is you can make a good profit even with limited investments. In this case, you can see down below the list of stocks, the investment for this exercise would have come to $2,044. I rounded off the numbers just a bit here, folks, so don't, if you want to take this and crunch the numbers yourself, you might get slightly different numbers, but this is more or less accurate. So I would have invested $2,044. Even when you're buying, as we did with TTD, one share, Paycom, one share, we went to Square, the price was $63.50, so we bought 5 shares there. Again, trying to invest approximately $300 per holding. In Mode, which I've mentioned to you, INMD, we got 8 shares at $38, and you can see how the prices here have varied, 71. Let me point out, by the way, with TQQ, we got in at 90. I say it's now at 180. I did that because at 180, TQQ split 2-for-1 in January of this year. So I put it now, it's now at about 90, but that, if you adjust for the split, it would have been 180. I'm probably being unclear here, but basically I did not put the split adjusted price in because I wanted to be consistent. When we picked it when I picked it a year ago, January, it was at $90, and so the equivalent price, had it not split, would be 180. And so you can see the profits on the third column, where on TTD we made 466, Paycom 104, Square 808, etc. And you go down the bottom, we invested $2,044. The profit was $2,204. And so our gain on a percentage basis was almost 108% down there, you see, in 14 months. Now, by comparison, the S&P 500, which is the benchmark of performance, was up 16%, 16% for 2008. And by the way, the prices that I was buying, this was in January of 2020, before we knew COVID was coming out. So when these stocks would have been purchased for this exercise, remember that all of those would have dropped dramatically. Okay? When we got to St. Patrick's Day, the TQQ, which we bought at 90, went all the way down. And remember, that's a 3-time leveraged ETF on the NASDAQ. From $90, it fell down to approximately $20 at one point, the low, I think. And this is why, folks, sometimes you're going to drop, and those ETFs, when they're leveraged, are going to drop like a rock, just like they can go up like a rocket. But what this teaches you is a couple of things. If you buy, you can buy. Instead of, sometimes I'm afraid, talking about the penny stocks, that a number of you are going to piss your money away, throwing money into one bad penny stock after another. So if you're going to play the penny stocks, you got to do some homework on them. You got to know that they are solid. You got to know they got good management, and you got to know that they've got a good story. I tell you, you got to buy the story. Why are they going to make money? What is their growth story? Does it make sense? Does it make sense that they can execute the plan? Not all of that is hard numbers. It's not just looking at numbers on a sheet of paper. Some of this is intuitive. You got to use a little judgment. You can ask others. You can look at what other comments are. But if they have a good story and you pick these wisely, as I said in the beginning, yes, penny stock investing can be hugely investing. But this list is not at all penny stocks. These were all high-priced stocks. As you can see, Adobe, second from the bottom there in the first column, Adobe we bought at $333, now $442. So even one share produced a profit of about $109, which is about 33% gain on the one share of Adobe that we bought. So what's the conclusion here? The conclusion is that I want you to know that you can diversify even with limited sums. You didn't have to buy 7 shares or 7 different companies. But if you want to do it this way, you could say, I'm going to put $200 into each position. So if you had a $10 stock, you could buy 20 shares. If you had a $200 stock, you would buy 1 share. If you had a $100 stock, you'd buy 5 shares, etc. $50 stock for $200, you'd buy 4 shares. And so that's one way where you say, I'm going to put the same amount of money in each of my positions and put them into, again, good quality companies, as we did with TTD and Paycom and Square, the NASDAQ 3 times leverage, which is the TQQQ, the InMode, Adobe, and Now. And you see all those again. So they produced a great return, 107.8%, almost 108%. These prices are based on Sunday, by the way. I did this on Sunday when I had some time. So the prices, some of these are down today, some of these are up. But anyway, I think it makes the point that we can build a great portfolio, and then you can hold on to a lot of your core holdings, you know, for years, and make some good money. I saw earlier today the fellow who started Vanguard and started indexing, by the way, Jack Bogle, who died just in the last year at about 90 years old or so. Jack Bogle said, if you really want to be a millionaire, put your money in index funds and then don't look at your portfolio for 50 years. Jack Bogle knows more about investing than I'll ever know, but I disagree with him that you don't want to look at it. He would say, don't even peek at it. I get his point. But his point is, if you put together some core holdings and just hold them, time is on your side and they will grow over time. Especially if you dollar cost average and continue to add to your position. I think it's unwise to say you don't ever look at them, but I think you can take the point that you shouldn't be necessarily looking at them and, you know, rubbing your hands every day. And the other thing, and I said this today on Twitter, and it bears repeating because I want you to pick up on this lesson right now that we've just gone through the horrible period of March, where our stock had gone down so much, our Humble at least had gone down so much. Let me bring up this. In green, we have Humble, and when you look at this, and you look at these peaks and valleys, the point is, after this third peak, and we came down, that was tough sledding, you know, from about the beginning of March. After we had been up so high, we came down and just kept going down, down, down. And now, from the March 16th, our low, we've been coming up for the last number of days. And we all feel better. And what I would say again to you, this is where, when you know you are in a good company, you don't want to panic. You want to just either buy some in the dip, or if you don't have any more money, just don't sell. Just don't panic. We're going to, I think, have Humble go back up to where those peaks were previously, and then I think we will go beyond that. When we hit those peaks in Humble, it was because we had gotten ahead of ourselves. We had too much enthusiasm, and that kind of a chart is not sustainable. A chart that is sustainable is what we see below that in black, where it goes up more gradually. Now, it's not as exciting. That's a high tides chart right there. And it doesn't have to be quite that slow of a dip. But we can have a chart that goes up more at about a 35 to 40 degree angle, maybe the 35 degree angle. When you're going vertical, when you're going up, you know, well, vertical, it's just, as you can see, not sustainable, because too many people make too much money in too short a time. And what happens is then they start rushing to the exits to get out and take their money off the table. And inevitably you're going to come down and crash. So I always talk too much, try to put too much information in one share. But I hope this has been helpful, and I hope that this example that I had earlier of these profits that we made just by putting some money, 1, 2, and 5 shares. You don't have to go out and buy 10,000 shares or 1,000 shares or even 100 shares. You can make good money, as we did, doubling our money in 1 year, over 100% in 14 months, just in buying 3 shares, 1 share of this, 8 shares of that. Pick your stocks well and then hold on to them through the long run, because as you see here, we made 100%, and that's after we had dipped about 80% through the COVID scare in March of 2020. Okay, folks, thank you as always for joining me. Give me a thumbs up if you would. If you're watching and you haven't subscribed, please do. And we will look forward to continuing to hold our conversations most evenings. Sometimes we take the weekend off so you can go out with your family and friends. But thanks so much, and we will see you again tomorrow night. Take care until then.